So, yes, ma'am, we can start. Rekha, ma'am, you can start. Sorry to, ma'am, you are not audible, ma'am.
Microphone is not connected.
Yeah.
The connected external camera or something, can you unplug it and join using the camera?
Sorry, is it audible?
Now we are audible.
Yes.
Now we are audible, please.
Okay. A very good evening to all the members here. So today, welcome all of you for the session on virtual digital assets. So it's my immense privilege to introduce the faculty for the day who is taking the session on virtual digital assets. So as we know, in this current budget, we had the most widely discussed topic, which is called as virtual digital assets. So from the budget, we knew it was more of a regulation than a ban in India, with a 30% tax rate, whether you are investing in virtual digital assets or whether it's a transfer of virtual digital assets, and no deductions were allowed except for the indexation for the cost. Now we have the speaker for the day, who is Mr. Arun Balu. And to speak about this speaker, he has a very interesting profile. So basically, he's a mechanical engineer from Anna University, a counterpart of mine, I could say. Then he's qualified his chartered accountancy with rank both at the inter as well as the final levels with 4th and 12th, 21st rank respectively. He has also done his MBA from the IB Business School. It is in Canada. Now he's working as a manager with Block Zero, and he's having an expertise in financial services, payments, and digital currencies. Now, prior to Block Zero is basically a company which is having a niche digital asset consulting firm which is based in Montreal, that is in Canada. Prior to being with Block Zero, he was associated with the Assure Consulting from 2010 to 13, and then he was associated with Citibank as a manager and the leadership associate, and finally he moved on to Deloitte in Canada as a senior strategy consultant. And one another interesting thing about Arun is his hobbies include being a magician, and that's something that struck me when I saw his profile, and also he's interested in scuba diving. And he has won various awards, including the Country Business Manager Award and the Client Excellence Award in Citibank. Now over to Monica for the poll, and before we move on to Arun sir for the session.
Yes, ma'am. Sir, I have shared the results of poll for the first question.
Okay. Thank you everyone for the poll, and thank you Ms. Rekha for the wonderful introduction. So good morning, good evening, and good afternoon to wherever you are seeing this from. So as we can see from the poll, I think we have a kind of distributed audience set. Like we have people under the age of 30, but predominantly above the age of 25, and also we have equally distributed between 25 to 40, 40 to 60, and above 60. So it's a pretty diverse group, I must say. So we have one more small question before I start my session. Monica, if you can please give the second question.
Is it visible, sir?
Yes. So please, if you can answer this question, and once you have 30 seconds, if you can please answer, and then once we get the results, we will begin the session. Monica, please, Ms. Monica, please tell me once time is up. Okay. Perfect. Very curious to look at the results. Oh, very interesting. So we have a predominant, at least, or a majority kind of looking to, or who have invested in the digital asset space, which is a big surprise to me. I mean, as a as a chartered accountant, it is, when I was kind of investing in this space or thinking of investing in this space, it was very difficult. Only after my profession or my job moved into this space did I really think of investing in this space. So it's very interesting, and it kind of sets me up to talk about this topic. I'd like to share my screen now. Ms. Monica, if you can please give me sharing
Yes.
privileges. I will share my screen, which is this one, and I will slide share. Okay. So I hope you can see my screen. Ms. Monica, please
Yes.
let me know.
Yes,
Okay,
sir. Visible.
perfect. So I'd like to start with a quote: "Money never made a man happy yet, nor will it ever. The more a man has, the more he wants. Instead of filling a vacuum, it makes one." So said by Benjamin Franklin. I really like this quote. Money is something that we use every day, and it's a part and parcel of our life. But as this great Benjamin Franklin said, I don't think it can ever make a man happy. And happiness comes from various other things. So chartered accountants, dear chartered accountants and honorable guests, a very good morning to you all. Good afternoon and good evening from wherever you're seeing this. My speech today is about an overview of digital assets. And my objective is to kind of provide you an overview or an understanding of this space, and also what actionable steps we can take as chartered accountants, either in practice or in terms of career prospects. So I'd like to start. I really find this funny that person who you can see in the corner with a sad face, you can envision me sitting there. So whenever I get questions, most of the times I get asked on like, when do we buy crypto assets, or when do we have to buy, how do we buy, and how can we make money? But there seems to be limited interest in actually understanding the space. My intention today is not to talk about the investment side, is to more talk about the ecosystem, to give you an overview of what exactly the space is about, because I specialize in this space. And just to give you a brief, I think Ms. Rekha ma'am had just done thorough justice to it. I would like to just stress on my digital asset expertise. I specialize, or I'm specializing in the central bank digital currency space. As you may know, that in the finance budget, Ms. Nirmala Sitharaman, she mentioned that by 2023 the digital rupee is going to be announced. So that is a space I'm kind of specializing in. I also specialize in enabling the digital asset infrastructure as a strategy and operational consultant, and also help in financial analysis and business plans. I have my contact information, so if for some reason I'm not able to take your question, please reach out to me over email or my LinkedIn. I always get joked by my dad. He always says, edo pandran, which in Tamil translates, in English translates to, he's doing something. But I mean, it's a very complex topic to explain, and I hope I can do justice to it. And I have kind of created a couple of slides which helps us to kind of understand this space. So I have split this agenda into basically two parts. First part talks about the digital asset space, and the second part, which will be about for 60 minutes, the second part is on the CA relevance, like how is it going to be important to us. And finally, like after the session, I will send you I prepared a brochure, kind of a booklet with all the resources which you can use in your practice, either whether you intend to service such crypto firms or you intend to understand more about this space. There is detailed kind of articles, the web links and books, which I suggest, which I found very interesting and very insightful. So I will share that at the end of the session. So to start with, as any chartered accountant, I mean, we are very averse to risk. So this is just a general disclaimer. Basically, what I'm trying to say is that this is not any investment advice. This is purely for educational purposes. and I hope you use it only for your education. And please consult a financial advisor or anyone who is very well aware of investments, because this is going to be purely for educational purposes, only for our SIRC Chartered Accountant members. So I'll start with the digital asset ecosystem. And if I have to start with the digital asset ecosystem, I thought we need to understand the evolution of money, because it's very important to understand. For that, I need to take you back to the 6000 BC era. The Mesopotamian tribes, they used to use barter system to transact with each other. They had excess of fruits, vegetables, which they used to kind of give to other tribes for, like they used to buy weapons, they used to buy stones, which they didn't have, and they used to give whatever they used to have. But the problem, I mean, the reason why we went from one monetary instrument to another was because of certain pain points that we faced at every stage. So they either pain points or some trigger events that happened in society. So the pain point we faced in barter system was that there was no standardized exchange rate. And that is why we evolved into the next phase of monetary instrument, which is objects. We used objects as standardized store of value, and we use different types of objects. For example, sometimes we use stones. We use in the African type, they use agari beads, which are small beads which are used. The European settlers, very smart people, they used seashells. And seashells they used because there were different types, and they ascribed different value to different types of seashells. The more harder it was to find a particular seashell, the more value it had. And this flourished as a form of monetary instrument during the 1600s. But what happened is when the large boats were created, these large boats, they just amassed large quantities of this seashells, and they kind of flooded the market. And as a general economics, if you increase supply, the value decreases. So the value of all these seashells dropped. And that kept on happening for different types of standardized objects that we used. Then we actually moved to gold. Gold, even today, is really revered as a form of monetary instrument. It is revered as a form of commodity. I mean, in India, everyone knows how much people like gold. So this was a fantastic monetary instrument that we went to, because do you know the reason why gold was so revered, or why it is considered as such a valuable monetary instrument? The reason is that it is a very scarce commodity. It is very difficult to mine gold. Every year, the production or the total production of gold increases by hardly 1 to 2% of the total supply which is there. The reason is, even with all the advancements in technology that we have, it's very difficult to mine gold. And that's why it flourished as a form of monetary instrument. But there were pain points associated with it. For example, it is very difficult to transport. It's very difficult to translate. Suppose I want to buy a piece of land. I cannot go with 100 kilograms of gold and buy a piece of land. It's difficult. So that's why we went to the next form, which is the gold reserve form of monetary instrument. It was called the gold standard. So what happened during the 1900s is that all the central banks or governments, whatever the case may be, they said that, okay, all of you people, all of you banks, you have gold. It's very difficult to transact. You give the gold to us, we will hold it in our vaults, and we will give you notes. So they moved on to a system called the gold standard. And what happened is that these notes were considered similar to gold. And if you can see in the notes of olden days, they would have said that if you give this note back to us, we will give you equivalent amount of gold. And that was called the gold standard. And the economies flourished during this period of 1900s when they were on the gold standard. 1900s, almost 50 nations were on the gold standards. In the European times, it was called, this period was known as the period of the it was called La Belle Epoque, which in English, it's French. In English, it translates to the beautiful era. The reason it was called the beautiful era is because a number of achievements took place during this phase. Number of scientific advancements took place, a lot of medical advancements, a lot of artistic advancements took place. It's because there was so much value for money. It was difficult to get money, and people funded good projects. And that's why this economy flourished. But unfortunately, in the year 1914, we faced World War I, catastrophic era. And what ended up happening is that many nations, they wanted to fund the war. And because they wanted to fund the war, they wanted to go away from the gold standard. and they moved on to paper currency, where the central banks were allowed to print money without the backing of gold, and the backing was government debt. So if you go to any note now in any country or in most countries, it's IOU, it's the government which has to pay, and every currency is backed by government debt. And that's how we entered the current system, where it is based on government debt. Either central bank prints the money, or it is where because of the fractional reserve system, the banks are allowed to create money by lending out money. Then we moved on to a kind of e-money. Like, I mean, we can see our like phone is on our money, it's on our wallets, it is on our computers. It's digitally available everywhere. It's on our plastic cards. That's what we call e-money. But what happened? Another trigger event happened the year 2008. I know most of us chartered accountants will be aware of it. It's the financial crisis. The financial crisis happened in 2008, and why it happened was that the central bank, especially in the US, they reduced the rates, the interest rates. The banks were allowed to lend out risky loans for risky investments, and the subprime mortgage crisis happened. What happened after the subprime mortgage crisis is that people lost jobs. There was a high unemployment. People went into bankruptcy. Companies went into bankruptcy. And that's when an unknown person named Satoshi Nakamoto, he invented this currency called Bitcoin. Now, Bitcoin was a revolutionary concept. It was a revolutionary monetary instrument, at least from a chartered accountant being the space, was deeply been researching about this space, deeply being involved in consulting in this space. It's a fantastic monetary instrument. I'm not advocating, I'm not saying it's the best currency, but I mean, I'm saying that it has certain characteristics of money, which I will take you through, why it is considered a very good monetary instrument. And from 2009 onwards, Bitcoin became predominantly prevalent in the society. And now we have a whole gamut of digital assets. There are, I mean, almost close to 15,000 odd cryptocurrencies. I mean, you can't even count them because some of them are private, and there is no centralized place where you can keep a note of all the tokens and currencies which exist. So I'll move on to the next slide, which kind of talks about Bitcoin. And here I don't want to go into too much detail about Bitcoin. I just want to say that its true value comes from the trustless nature that it has. I'm not sure, because 50% of you have invested in this space. I'm sure you would have done your level of research. But I'll just like to tell you some few points which I found very interesting about Bitcoin. I'd like to stress upon it. It is considered a form of digital money. Digital gold is questionable. There is like debate going around it. Digital store of wealth is still debatable because there is still talks going about it. But why does it really have value? I mean, as a chartered accountant, I mean, even I was wired. Like, I mean, I used to joke to my friend in Canada, like, what? This is totally, I mean, how can you invest in something which doesn't exist? No central authority, there is no intrinsic value, and what is backing it? But the more I delve into it, and the more I understand the monetary instrument as a form of currency, I started to realize that the value lies in the decentralized nature of how Bitcoin is. You don't need to trust a central bank. You don't need to trust a bank for the value, for how it behaves. It has its own decentralized nature of working, and that's where it lies its true value. It's you can store it anywhere. I mean, for example, I can store my Bitcoin on this device. It's a piece of hardware wallet. I don't need to store it on my computer. I don't need to store it on my crypto exchange. I can store it on this USB stick. It's completely offline, and I can put it in my pocket and take it to any country I go to. So it's a fantastic concept which was created, and it's even today, for the past 13 years, it has been in existence. It proves its robust nature and its robust capability. So what I've done in the next slide is kind of compared Bitcoin with gold and fiat currency. In this case, I've taken Indian rupee. This is in no way kind of to demean Indian rupee, but or any other fiat currency, but it's only for illustrative purposes. I have put all the traits of money on the left-hand side and kind of rated each kind of currency. And if you look at the different ratings, Bitcoin ranks highest in almost all the traits that money needs to have. The only place where it kind of suffers is sovereignty. There is no government up until now. I mean, very recently in October 20 or September 2021, El Salvador declared Bitcoin to be legal tender. So that is an exception. But no other nation in the world has declared Bitcoin to be legal tender. So it lacks in sovereignty. Gold and fiat currency also have its own issues, where kind of Bitcoin like offers a better nature is like, for example, durability. The Indian rupee, if it's a note, it can get worn out, can get torn. But in the case of Bitcoin, it has high durability because it exists digitally. It's highly divisible. One Bitcoin can be broken down into 100 million pieces. So that means number of decimals you can have in a Bitcoin. It's secure. Even though, I mean, there are hacks and all that, if you do your level of due diligence, and you can protect your assets completely. It's easily transactable. As I mentioned, I can hold it on this piece of device, which is a USB stick, completely offline. And I can send it from one person to another easily. It's scarce. There are only 21 million Bitcoins which will ever exist, out of which already almost 19 million are already mined. So there are only 2 million more Bitcoins that will come into production in the next 100 odd years, 140 years. So it's a scarce commodity. As I previously described the evolution of money, if it's a scarce commodity, it garners a lot of value. And finally, it's decentralized and it's programmable. I just like to leave it in your mind that Bitcoin can be programmed, and I'll go into the details of what programmability means in the coming slides. So what you can see in front of you is the entire kind of digital asset ecosystem, digital asset space, classified into a number of buckets. And how we have kind of thought about this space is broadly 3 buckets: virtual currency, non-fiat, tokens which are non-currency, and central bank digital currencies. So if you look at the total market cap of this for virtual currency and non-fiat and tokens alone, it comes to about $1.7 trillion USD dollars up until yesterday, till when I did my research. As you know, this market is very volatile. In November 2021, it was $2.8 trillion. Now it is at 1.7. That's a wipeout of $1 trillion. I don't know how much of you exited at the right time. I didn't, but I hope you made the right choices exiting at the right moment. But as I mentioned, this space is definitely volatile. It's something that we definitely need to monitor carefully and assess those risks. So I'd like to start with the commodity-like. So I mean, the reason why we have classified it so many, because there are different types of assets, and I'd like to briefly take you through each one. So I'd like to start with commodity-like. So these commodity-like, the reason this commodity-like is behaves similar to how a commodity, and most countries have classified Bitcoin and Ethereum, or Canada in particular has classified currencies like Bitcoin and Ethereum as a commodity. And by that, I mean it behaves similar to gold or silver, and it has similar properties. And as a result, it does not have to follow securities legislation. Similar regulations don't exist in India, but it is something that we may look forward in the future. Bitcoin and Ethereum alone command 55% of the digital asset space. So they basically dominate the digital asset market space. The remaining, all the other which are mentioned, it's 45%. If you have to calculate the top 70%, if you have to include the top 70%, you need to include stable coins and some of the hybrid coins to make it 70%. So I know a lot of you may know about Bitcoin. I spoke about it. Ethereum is another form of currency. It's also called digital oil because it enables a number of smart contracts. It enables smart money. A lot of other kind of applications are built on Ethereum blockchain. So it enables that, and that's why it commands a lot of respect and also a lot of market capitalization in the digital asset space. The next one is stable coins. It took me a long time to understand this myself. Being in this space and kind of researching this space, like why does this exist? But it has a lot of value. What stablecoin basically means is like for 1 USD tether is equal to 1 USD. It's basically a currency which has a backing of an asset. So for example, in India, if you look at Paytm Money, one Paytm Money in INR, which is held in your account, is equal to 1 INR. So that is basically what stablecoin means. It's just equivalent, but it's in cryptography. It's based on cryptography, and that's why it is called a stablecoin. And there are a lot of number of use cases for it. For example, you can easily swap it from a cryptocurrency, like for example, Bitcoin, to a stablecoin. You can move it like from this device to any other device very easily. You can transact very easily with people. It has a number of purposes on its own. Then I'd like to move to the next type, which is security. Security cryptocurrencies are Canada has defined a 4-step rule, or most North American countries have 4-step rule to identify security virtual currencies. And I'll read it out. It's an investment of money in a common enterprise to come significantly from the efforts of others with the expectation of profit. This is how the regulation is in Canada for a security cryptocurrency. And that's how we kind of delineate. And why we need to delineate security cryptocurrencies is because there are regulations associated with securities, which the companies need to follow to maintain such a cryptocurrency. And then I move on to the next type, which is tokens, which are non-currency. They don't have currency like attributes. I'll start with security there. So here you can have, like for example, Reliance, you can make it a security token. And security token means it will have cryptographic like properties. You can transact with it. You can hold it in a cold wallet, in a hardware wallet. So for example, Tesla, there is security wallets available in Europe, where there is a company which allows you to hold security tokens as Tesla. Real estate is another huge kind of use case where you can hold real estate in the form of security tokens. Then we have utility tokens. Utility tokens means that you can do any type of function using utility token. Like for example, you want to buy a music video. You can buy it using a utility token. So if you hold so many amount of utility tokens, you'll be allowed to use particular music video or a movie video or something like that. Then we go on to non-fungible tokens. Non-fungible tokens is a very, very big topic. There are a lot of things to discuss there. I'm sure a lot of you would have heard. I mean, even the previous speaker, Mr. C.A. Shashank, spoke about non-fungible tokens. What non-fungible tokens means is that it's not fungible. And what does fungible mean? Fungible means that one is equal to another. Like 1 Indian rupee is equal to another Indian rupee. 1 Bitcoin is equal to another Bitcoin. It's all same. It's like twins. You can't know the difference between them. But non-fungibility means that they are different. Every token is different. So for example, one Ravi Verma painting will be different from another Ravi Verma painting because it is drawn differently. It's drawn at different time. Different brush is used. Different paint is used. The painting may look different. It's very difficult to have art in the same form. And most of the non-fungible token is based on art, and they want to capture it. And people may think like, why is it? What is the real use? What use case I found really fascinating is like, you get messages on Facebook. You get messages on Instagram, you get messages on any other kind of social media app of pictures, of videos, of art. But are the content creators really compensated for the hard work that they have put to make this art? No. Non-fungible tokens can enable artists, content creators to get compensated for the hard work they have put in. Later, I mean, it's yet to evolve. The space is definitely yet to evolve, but later content creators will get compensated because of the NFTs that they have created and it's owned by some person. And that's how I see like this space growing. Hybrid is something I'd like to call others. Like they kind of have different properties, but most of the countries' regulations say that they will be classified as a security because they also have security-like properties. So that's how we like to look at others. And central bank digital currencies is my pet subject. I like to specialize in this space. There are totally 3 central bank digital currencies which are in existence so far. That is Dcash, the Sand Dollar, and eNaira. They are present in Eastern Caribbean Central Bank, which is a group of 8 countries. They are already deployed in 7 countries. The Sand Dollar is deployed in Bahamas, and eNaira is deployed in Nigeria. So this is, I hope it gives you an overall picture of what the digital asset space looks like. Now I've spoken about digital asset, the space, I mean the type of digital assets. Now I'll go on to the ecosystem. So what you can see in front of you is the various ecosystem players. And totally there are about 8 players that I've kind of bucketed them into. Starting with, and you can see a green dot and a blue dot in across each of them. By a green dot, it means that these players are already in existence. They have been in existence for quite some time in the industry. And the blue dot indicates that they are emerging, that they are going to emerge into the ecosystem very soon. So now I'd like to start with the regulators, which is the topmost part. The regulators, the key part is always we say, cryptocurrency needs, at least the cryptocurrency world, cryptocurrency needs regulation. We need regulation. We're talking about we need to regulate this space, but what do we need to really regulate, and who are the regulators? That's what I try to highlight here. Finance Ministry plays a key role to give credibility to this asset. They need to either classify, they need to either ban it or say that it is it can give basic credibility to this asset. Then we have the Reserve Bank of India. They play a huge role in the deployment of the central bank digital currency, which is going to come very soon. Then the Income Tax Department plays an important role in taxation. I don't know how many of you will be happy about the 30% taxation just come up. I am definitely not very happy, but definitely I think it's a move in the right direction in terms of legalizing or regulating this space. Securities Exchange Board, as I mentioned to you before, there are certain tokens which are classified as security, and the Security Exchange Board may play a key role in identifying which assets they are and what kind of compliance the regulators or the industry needs to follow with regard to security tokens or security currencies. And finally, the Financial Intelligence Unit of India, they are involved in tracking illicit activity or terrorism activity. So, for example, the transaction monitoring that banks do. For example, some terrorist is using cryptocurrency for buying any asset, or he's buying weaponry using the cryptocurrency. The Finance Intelligence Unit of India should be able to kind of make regulations so that people are able to monitor that particular asset. Currently, I don't see, I'm not very well aware of the Indian space, but I do not come across the very detailed kind of monitoring mechanisms in India. Also, I think one more thing to add is also, I think our CA community needs to play a key role here in terms of revenue recognition, in terms of accounting for cryptocurrencies in balance sheets, because very soon corporations are going to enter into the space. So I think there is a little more kind of regulators involved in this regulatory column. Next, I'd like to go on to the digital asset market enablers. So primarily there are 2 types. One is miners and the second one is crypto exchanges. So miners basically are involved in creating this ecosystem. So they mine Bitcoin, or they mine Ethereum, or they mine different kinds of ecosystem. They bring it into production. They bring it into the market. So they play a key role in bringing this into the market. And if you want me to go detail into miners, please mention it in the chat as to how the business model of a Bitcoin mining farm looks like. I can go into details in the question and answer section. Then we have crypto exchanges. I'm sure all of you who would have bought cryptocurrencies may have bought using crypto exchanges. Then we have liquidity providers like banks and fintechs who will be providing money to buy these cryptocurrencies. And we have investors like there are retail investors like me and you, maybe retail investors. Very soon, like corporates may enter into the space because it's very volatile. It's very, looks very enticing in terms of the returns they can make. Securitized offerings like derivative products may come very soon. We have ETFs and mutual funds that may also come very soon. Value-added service providers, like for example, do you know that you can lend your cryptocurrency to earn interest? You can borrow using your cryptocurrency. You can also lease your cryptocurrency to earn money. There are various other value-added, like insurance is another big thing in value-added service providers. Custodians, you can either hold it in a hardware wallet, which is a USB stick, or you can hold it with third-party custodians. And why, third-party custodians are very important? It's very important. The reason is that For example, you hold your assets on a crypto exchange. Do you know that a crypto exchange can be hacked? In Canada, Quadriga CX is very soon going to, it's I think a Netflix movie now. It was hacked. People lost close to $600 million in assets because the owner, the CEO, founder, he died mysteriously in India. He took with him all the private keys. And there is a saying in the crypto world, not your keys, not your coins, which means that if you don't hold the keys to your asset, it's not your asset. So I would urge you to do your level of due diligence and make sure that you hold your cryptocurrencies in kind of safe places and make sure it's kind of protected. So third-party custodians will provide that level of security, will provide that level of trust in the ecosystem. Then obviously we have technology providers. There are a number of technology providers I can go on talking about, but I mean, custody, the AML, KYC infrastructure are some of the major kind of infrastructure, the technology providers in this space. So I'd like to go on to the recent trends which are happening in this space. So I split this into three major buckets. And as you can see, like this market, definitely the adoption is there, interest levels are high. So the first one talks about blockchain platforms market size, and so investment research done by ARC, where they saw it for 2020, it's at $1.4 trillion. And in 2030, they predict it to go to $49 trillion. That's a CAGR of 43%. It's huge. So there is a lot of potential and opportunity in this space. The interest level on digital currencies, researched by Gartner, a world-leading research institute. They said they surveyed 250 CFOs and other finance leaders, and they found that 47% of them are interested to access digital currencies for their business in 2022. And if you look at Indian market stats, 100 million cryptocurrency, it was a big revelation to me. I never knew that there were 100 million cryptocurrency users in India. It's the number one in the world. There is no other country in the world which has this number of users. The second one is USA with 27 million users. And Chainalysis, another top American company which does market intelligence for crypto, they have reported India to be world number 2 in crypto adoption. World number 2. The number 1 was Vietnam. I don't know for what reason, but number 2 is India. And the growth in the user base in India between July 2020 and June 2021 is 641%, which is a massive growth. So there is a lot of potential, especially if you look at the Indian market. And it's not only retail consumers. There are also corporations and countries who are really looking into this space. So to talk about, I'm sure many of you would have heard about Tesla. They have 43,200 Bitcoins in their treasury, equivalent to $1.7 billion. Next is MicroStrategy, 125,000 Bitcoins. Square, a payments firm, 8,000 Bitcoins. KPMG, an audit firm in Canada. KPMG Canada recently bought an undisclosed amount of Bitcoin and Ethereum. They also bought an NFT called World of Women for $73,000. I mean, I've just named a few of the corporations that hold publicly limited companies. In their balance sheet, they hold cryptocurrencies, and that's why we have this information. So it's becoming a phenomenon, not only with retail investors, but hugely with institutions like corporates and also institutional investors. As I mentioned to you before, Bitcoin is a legal tender in El Salvador. They have accepted Bitcoin to be legal tender. That means they can use it as a form of legal tender currency. In El Salvador, which has a population of close to 7 million odd, 50% of them, they own a Shiba wallet. That is about 3.5 million hold a Shiba wallet, which means that they can access, they get access to Bitcoin. Only 1.7 odd million have a bank account. Double of that have a Bitcoin wallet. So you can see the level of interest in that particular country. And that country holds 1,800 Bitcoins. I'm not saying that Bitcoin should be legal tender, but I'm just saying that countries are also thinking of this as a form. This is what is happening in this space. Companies are also accepting Bitcoins as a form of payment. As you can see in the left-hand side corner, I have highlighted a couple of firms which accept Bitcoin as a form of payment, not necessarily in India, but in other countries in Europe and North America, they accept Bitcoin as a form of payment. Large payment platforms, they are very careful in their business strategy and their business model. Visa, MasterCard, PayPal, Square, all of them have been looking into the cryptocurrency space. They have started to offer, they have started to kind of offer crypto exchange services, like PayPal has at least offered crypto exchange services. They have started to offer cards. Visa and MasterCard offer crypto cards. Basically, the rewards come in cryptocurrency. Yeah, and also you can transact with Bitcoin, with cryptocurrencies amongst merchants using the Visa and MasterCard. So this is the level of adoption in corporations and countries. Next, I go on to financial institutions. Okay, I've talked about retail users, I've talked about corporations, I've talked about countries. What are the financial institutions doing? Financial institutions globally are beginning to embrace digital currency. And I'd like to start with the US. US has been very forthright and forthcoming in terms of adoption of cryptocurrencies and digital currencies. First, they started with accept, like US banks are now allowed by the government to accept stablecoins as a form of payment. Then a big, large bank created its own form of stablecoin. Crypto-friendly banks exist. It's very difficult for a crypto firm to get a bank account. Do you know that many of the crypto firms, because they lose their bank account, like banks tell them that they cannot transact anymore with a crypto firm because of the compliance risk associated with it. They don't know how to deal with it. And as a result, they're not allowed to deal with a crypto firm. So crypto firms suffer to get a bank account. But in America, there are specialized banks which allow crypto firms. They want crypto firms as clients. One of them is Silvergate. They want to have crypto firms as clients, and they promote it as a crypto-friendly bank. Canada has been pretty progressive. They were the first ones to launch an ETF product for cryptocurrency. The first exchange-traded mutual fund was launched in Canada. They have dedicated, some of the banks have dedicated strategy teams to look into digital currencies and virtual digital space. The Bank of Canada has been a pioneer in the research of CBDC. It has released a number of papers. I've read it. They are very, very detailed in terms of the research they do, and they have done extensive research on the space. They have dedicated teams focusing on the CBDC space. Singapore, they want to be the cryptocurrency global hub. That's what they want to achieve. That's what they have said openly. A large Singaporean bank has allowed crypto exchange services for their clients. And they also, the Monetary Authority of Singapore conducted a major, large global CBDC challenge where 300 participants were called. There were 15 finalists and finally 4 winners. So they are really monitoring the CBDC space. Europe, they have institutional crypto exchange where banks have allowed, as I mentioned, the custody service, holding it in this kind of thing. There are large banks which are providing the services. Digital Euro, the Digital Euro project, recently they have launched a tender. It's a 5-year project. They don't want to hurry. Many nations are hurrying up to launch a CBDC, but they want to make it slow. They want to make sure that they learn from other people's mistakes, I guess. But they are kind of taking a wait and watch approach. Crypto custody. Few banks are offering this service where they allow kind of crypto. Sorry, I mentioned this before. What I wanted to talk about is also the crypto exchange. Like banks are also started to offer crypto exchange in Europe. So I spoke about programmability before. I mean, it's always questionable, like what is programmability? What is it all about? So there are basically 2 types. One is programmable money and the second one is programmable payments. Programmable money is that money can be programmed to do a function. For example, a central bank gives money to a citizen. You don't want him to spend it on unnecessary purposes. Like, for example, you don't want him to spend it on alcohol, or you don't want him to spend it on buying food or anything like that. You can prevent him from spending it because you can program the money to do that function. You can use it only for buying groceries, or you can use it only for paying rent. That is what programmable money is about. Also, you can also create interest rates on the currency. That is what programmable money is about. Programmable payment is that payment of the money can be programmed to at certain trigger events. So for example, you have an electric vehicle, it comes to a charging station, and you can split it into 3 parts. You can make it, you can, like suppose the electric, we could pay 100 rupees to the electric station. 60 rupees will go to the electricity company, 20 rupees will go to the station owner, and 20 rupees will go to the service provider. We already have a little bit programmability in our inbuilt traditional finance system, but more complex logic can be built using digital currency. That's all I'm trying to say. Now, as I mentioned before, do you know that you can leverage your assets, like crypto assets, to earn yield or borrow money? I mean, I've mentioned a couple of examples below, but basically you can use your assets similar to a fixed asset. So suppose you buy Bitcoin, you can hold it as a fixed deposit and earn cryptocurrencies as a return. Similar to how we have SBI fixed deposit rates, there are also cryptocurrency fixed deposit rates. You can stake your assets. These are all available only for certain types of cryptocurrencies like Ether, where you can lease it for a certain purpose and you get a return. And similarly, borrowing, you are allowed to borrow money. For example, you have cryptocurrency. Suppose you have cryptocurrency worth, say, about 10 lakhs. You can give that as a collateral to the bank, and the bank will give you a loan. They can give you either a personal loan or they can give you a mortgage. I'm not saying a bank. There are specialized firms which do this, either in the centralized space or in the decentralized space, where you can get money. So the purpose of that is that instead of selling your currency now or asset now, you're still able to hold it in the hope that it will grow to a higher value in the future, but still get a loan for what it is valued at this point of time by paying a small interest rate. Now I'll go on to my pet subject, which is central bank digital currencies. So, I mean, before I go here, like, I mean, it took me a long time to understand this space because I'm not very smart. I take time to understand things. I was thinking, like, isn't money already digital? Like, aren't we already seeing money in our phone, in our bank account, in our, I mean, wherever we see it, it is digital nowadays. But do you know that is not issued directly by the central bank? The money which you see, for example, in a HDFC bank account or a SBI bank account is the commercial bank money. It is not issued by the central bank. That is a major difference. So the central bank issues only 2 forms of money. It issues cash and it issues reserves. The reserves are held only by commercial banks with the central bank. Central bank digital currency is the third form of central bank money which will be issued. There are a number of use cases for it, which I will try to explain to you. So as you can see, I have given a present and a future view. If you see that the present, it has like all the things that we already know of. It has cash, the physical cash, checks, central bank reserve, electronic money, cards, cryptocurrency, electronic fund transfer. In the future, everything still exists. But we have something new, which is called digital rupee, that golden color coin, which you can see. I don't know how it's going to look like in the future, but that also will exist digitally. And it will be called a central bank digital currency, and maybe it may be called digital rupee. So that's what's going to happen in the future. And I just want to give you a landscape of what's happening in the world. The world is exploring to adopt CBDCs due to varying reasons. I'd like you to kind of go through this map for a brief second while I just sip a glass of water. So there are 9 countries which have launched a central bank digital currency. There's Nigeria, Eastern Korean Central Bank. There are 7 countries, and Bahamas. There are 86% of the countries are exploring central bank digital currencies. That is 90% of the GDP, world's GDP is exploring central bank digital currencies. That is huge. There are 3 stages to developing a central bank digital currency. It starts with research, that countries go to some level of research. US is currently at the research stage. Then we go on to the development stage. India is in the development stage because they are going to develop a central bank digital currency, and this period 2022-2023 they are developing a central bank digital currency. Also is Canada, also is Brazil, also is Australia, right? And then the next stage is pilot, where a country is in the pilot stage. China is in the pilot stage. China is doing a fantastic job in launching a central bank digital currency. I mean, they are, I think, one of the best in the world in terms of planning and kind of strategizing the way that they want to launch a central bank digital currency. They already have a fantastic payment infrastructure, but they're doing still a fantastic job in launching a central bank digital currency. I'd just like to give you some stats. They started long time back, almost 4 or 5 years back, to plan for a digital currency. It is already in existence now in pilot stage. They have 261 million users who are using central bank digital currency. They have 8 million merchants. 14 billion transactions have been recorded by China on central bank digital currencies. And they really plan on opening it up for the Winter Olympics in Beijing in 2022. They have launched it in 11 major cities. US is slightly worried about the China's digital currencies because US is considered as a dominant currency, a world reserve currency. China, with its CBDC plans, is actually of a concern to US. May not come directly, but what we are reading in the industry is that because of its robust nature, its transactability, it can be adopted very easily by different countries. And if you're following the Belt and Road Initiative, China can also ask other countries to kind of adopt these digital currencies very soon. And as I already mentioned, digital rupee is going to be launched very soon in India. I am going to closely watch this space. I am sure India will do a marvelous job. So just to give you a background, I come from the payment space. I've been working the payment space for almost close to 8 years now, and I specialize in this area. When I moved to Canada, my initial perception was like, okay, India, I mean, I'll see new things in North America and like it will be fantastic. But what I came to realize is that India has one of the best payments infrastructures in the world. It's a case study for countries. And I'll give you just a backdrop as to why that actually ended up happening. Is that because countries, when they went into launching a payments infrastructure, the developed countries, at least, they developed it a long time ago. And it's not easy to change payments infrastructure. And what ended up happening is that the payments infrastructure was developed a long time back, and it was of a very robust nature. Like, I mean, at that time, it was whatever technology they had, they developed it. But developing countries, they got the technology only at a later point of time. And as a result, they were able to put in new technologies, new tooling into it. And that's why India has one of the best kind of tooling or payments infrastructures in the world. The UPI system which they have done is mind-blowing. And I'm very sure even the CBDC infrastructure that they were going to launch will be really fantastic. So I move on to the next topic, which is I'm just giving you a brief of what countries have launched the central bank digital currency. As I mentioned, there are 3 countries which launched it. In Bahamas, it started, all have been launched between the year 2020 and 2021. The Bahamas launched the Sand Dollar. It's a small nation, 400,000 people. Total GDP is about 12 billion. DCash, which was launched in the Eastern Caribbean Central Bank. There are 7 countries there. Total of 600,000 people, $5 billion almost in $5 billion in GDP. eNaira, one of the largest countries, like 210, it's one of the largest countries in terms of economy in Africa. They have launched a central bank digital currency. Very closely watching this space in October 2021, and it's doing fantabulously well. I keen to see how it develops further. So there are basically 3 monetary currencies that you need to remember, which have been launched in 9 countries, and very soon more are to come out. So what is a central bank digital currency? Okay, I've talked a lot about central bank digital currency, but what does it really enable? Like, what is the real benefit of a CBDC adoption? So what I've done in the left-hand side is shown you a picture of how a central bank digital currency will look like. So you will have a Reserve Bank of India, which will mint central bank digital currency, and it will issue it to financial institutions, to governments, to merchants, to unbanked consumers, to bank consumers. And that's how this ecosystem will look like. But where it kind of differentiates from the current system, the current traditional financial system, is that the Reserve Bank of India can directly send money to an unbanked consumer or a bank consumer. The government doesn't have to go through a bank to issue money to a bank consumer or unbanked consumer. Do you know how hard it is to get a bank account for a person who doesn't have a bank account or whose family doesn't have a bank account? It's very difficult. I have personally tried. So a central bank digital currency really helps in financial inclusion. There are 190 million people still without a bank account in India. And a central bank digital currency will be really helpful in getting financial inclusion, where people will get access to money. Because now, for example, you need to open a bank account, you need to provide certain documents. You need to provide KYC, you need to provide your Aadhaar card or your PAN card or some document. But for a central bank digital currency, there will be different wallet tiers available where you don't need to provide all these level of details. That's why it's helpful in financial inclusion. Like, for example, cash, you can give cash to anybody. Anybody can accept cash without giving you any documents. The reason is it's central bank money. It is widely accepted. It has to be accepted by anyone without showing any proof. Similarly, central bank digital currency also will be available. It will also be available. It may also be available offline, where you can hold it in a card. You can tap and send it from one person to another. So there are various ways in which the space is going to grow. Also, you can perform monetary policy very well in this space. So, for example, governments, they can increase interest rates or decrease interest rates instantly. So, for example, they can make it negative interest rate, or they can make it positive interest rate by a change in the program features. Targeted fiscal programs can be conducted. They can, like, for example, one small segment, you want to send them money, you can send for that particular set of people. You can also do cross-border trade. For example, it's a big project, especially in central bank digital currencies, like, because this infrastructure is coming into existence currently, all nations are building the tool set for it now. And as a result, like, they can build connected systems. So an mBridge CBDC project, which is between China, Hong Kong, UAE, and Thailand, they have built a CBDC project between each other so that they can easily transact between each country quickly using CBDC. So more such kind of CBDC networks will be created in the world, which will reduce our transaction costs for cross-border trade. So that's why it has so many kind of benefits associated with it. And obviously, we being India will definitely reduce the transaction cost. So, I mean, we launched a rocket to the moon at the cheapest, not cheapest, I mean, at the most cost-effective price. Even Elon Musk, who owns SpaceX, was giving very appreciative of the government, saying that a government entity launching a rocket to space is a massive kind of achievement. So these are some of the benefits that we can look at in terms of the CBDC space. So now I'll go into key regulations. I mean, we keep talking about regulations, but what do we need to really regulate is what I'm going to talk about. So there are 6 kind of categories I've looked at. One is securities legislation. We need to know what is the difference between a security-like coin and a commodity coin. And we need to have guidelines for like security compliance requirements. So those are with regard to securities legislation. Tax, I put a tick mark. Very recently, I mean, as I mentioned, we have talked about tax or in the finance budget. Investor regulations, we need to have guidelines to protect our investors. Like there are risks associated with investing. So how do we protect our investors when it comes to investing these assets? Are they aware of the risks when they invest in this space? Have they the right information they need to invest in this space? That's what investor regulation needs to talk about. Then when we talk about custody, okay, now we have crypto exchanges which are holding the assets, but has the government mandated qualified custodians to hold assets? In North America, there are regulations for exchanges or like exchange traded funds to hold cryptocurrencies with a qualified custodian. By qualified custodian, mean a custodian who has certain controls in place, certain kind of mechanisms to protect the asset. They must have SOC 2 audit, for example, done. So that kind of regulation also needs to be looked into. KYC, AML, as I spoke to you before, the Financial Intelligence Unit of India needs to look at it to protect us from illicit trading, illicit transactions which take place, terrorism funding. All those regulations need to be looked into. Accounting standards. How are we going to value crypto? Now, tomorrow, our clients, they have the cryptocurrencies in their balance sheet, or they buy cryptocurrency, how are we going to record for it in the books of accounts? Till date, I did not see any accounting standard which defines how we need to value cryptocurrencies, either as an asset which is invested or as a inventory. How do we look at valuation of these crypto assets? How do we recognize crypto revenue? How do we look at, there are various transactions that are taking place. So a lot of things even we as chartered accountants need to be thinking about in terms of the accounting standards. So even, I mean, when we enter the DeFi space, that's a whole different ocean. Like when we talk about leasing, lending, and borrowing, there is a lot of work that needs to be done in this space. Taxation. I know many of you may have questions regarding taxation. I saw the video of CA Shashank Srivatsavan. I think it is a fantastic video. I urge people who want to know more about taxation to please see this video. I will share this in the booklet, which I will send you at the end of my speech, which will have the link to this video. So basically, Mr. Shashank does a fantastic job. I think I would not have done justice to it the way Mr. Shashank has done. So he has talked about digital assets in terms of taxation. He has talked about digital assets, crypto, and also NFTs. He has also defined as a section 2, subsection 47A, how the Income Tax Act looks into defining virtual assets, and section 150 BBH, 30% flat tax, is covered in that in his speech. Also on TDS of virtual digital assets at 1% is also mentioned in his speech, and also about gift taxation, where if you gift it, it is taxable. So since we have already covered that topic in our previous CPA session, I am not going to go into further details. I would urge members to kindly look at this video for further details. So just to summarize, so we spoke about I spoke about digital assets, covered the evolution of money, Bitcoin, digital assets, the digital asset ecosystem, looked at the key trends. I mean, the crypto adoption is there, 100 million users in India, 641% growth. Banks are adopting it, crypto corporations are adopting it. You can program money to do various things. You can leverage it, you can lease it, you can give loan out, you can issue it for fixed deposit. Then I spoke about CBDCs, where I talked to you about the third form of central bank digital currency, how the world landscape looks like, what are the various countries which have adopted it, and what are some of the benefits and some of the key regulations, like how the evolution landscape looks like and what are the taxation benefits. So just to conclude, like, I mean, it is a vibrant and dynamic environment. Many players are there and provides value to a number of users. Crypto adoption is massively growing in India, not only among retail users, but also among banks, corporates, countries for varying reasons. And central bank digital currency, as I mentioned, is a new form of currency. India plans to launch it by the year 2023. The regulatory landscape is something that we need to closely watch, and maybe as chartered accountants even help define, or even as service professionals help our regulators understand this space. And the taxation of digital assets was a move in the positive direction, according to my opinion. So digital assets are here to stay and thrive as we look into the future. So as I started by saying that money may not buy us happiness, but money may not buy us happiness, but it can sure buy us freedom. By that, I mean that you don't need to be limited by a central bank or a bank to hold your assets. You can own your own sovereign rights by holding your own crypto assets. With that, I'd like to conclude my first part of the speech and open it up for any questions.
Yes,
so I'll just yes, Monica.
Yes, sir. You can just check the questions panel.
Okay.
Like posted 2 questions right now.
Sure. Yeah, the video recording of this session will be provided afterwards. Copy of the presentation, unfortunately, is proprietary, so we are not sharing it at this moment of time. But you can please reach out to me if you have any specific questions, and I'll be happy to take you through. I love talking about the subject, so you can please reach out to me over email or LinkedIn, and I'll be happy to have a meeting with you and discuss further details. So the next question is, as there is no proper regulation regarding digital currency, can we establish a company dealing with purchase and selling cryptocurrency as their major objective? there are few companies dealing with also. If so, what is the process, and can CA provide all its services to the company, as there is no proper law regarding that? Definitely, this is a evolving space. That said, even though there are no regulations, doesn't mean that we cannot hold a digital currency or conduct a digital currency company. As I mentioned, that there are 100 million users in India. Digital currency company can be incorporated. It's just that we lack regulations. And what we need to be careful as a chartered accountant is to, what I would urge you to do is to look at other countries where they have some regulations in place. For example, US and Canada, Europe has detailed regulations as to how to set up a cryptocurrency exchange. I would urge you to look at those regulations in building out such a firm, because India may adopt similar regulations. And at that point of time, we cannot say that we have not established the foundation for the company. And I think that it would be important for us to look at other countries to set this up. So I can understand your concerns that we don't have a regulation in place, and it might be tricky for us to kind of design the company. But the only other solution that we have at this moment is to look at other countries. And we could also reach out to the other cryptocurrency companies that have already been set up in India and look at how they have set it up. But as a chartered accountant, I feel we have the right knowledge, not only in the terms of looking at the business model, and I'm going to go into it very soon, but also like in terms of strategy and the operation point of view as to how we can launch a particular company into existence, create a company, and also help the investor or the promoter look in terms of risks, because we are all wired to think about risks. And it's very important to look at risks when we look at a cryptocurrency exchange, because there are a number of risks that we need to think about, especially crypto related risks, business risks, or even regulatory risks, which might come up in the future. Some of the things that you can also do is like look at the balance sheet of Coinbase. It is a listed company in the US. It has details on how it follows regulations, how it has set up its company. So those I think you can do to kind of set it up. That may help you. I'm not sure if I have given you a complete answer, but I hope I have given you some kind of direction. If you have any further questions, I'm happy to talk about it. You can please reach out to me on email or LinkedIn. Okay, another question is, what is the difference between a digital currency transacting digitally with the current currency? Okay, I'll read out the question again. What is the difference between a digital currency transacting digitally with the current currency? I think I understand this question. What I understood from this question is that what's the difference between like a digital currency and the digital currency that we see in our bank account? There are a whole host of differences which are involved. The first difference is that it is a cryptographic currency, and by cryptography I mean that there is, like, for example, if you look at Bitcoin, it has a cryptographic hash for the wallet. So it's little bit technical, but basically what we can understand is that there is a whole host of security features that are built into this currency that prevent it from being counterfeitable, that prevent it from being hacked. And that's why it kind of commands a higher kind of value in terms of the cryptographic properties that it has. The second thing is that it can be programmed to do a function. For example, I can make, like, there are smart contracts written. So I can make, like, for example, I have a lease agreement, and I say that, okay, at the end of the lease agreement, I need to debit my account and pay it to so and so person. I can program the contract that at the 31st or 30th or the end of the month to kind of send money to so and so bank account. If, for example, the maintenance is not done, I tick box like maintenance is not done by the landlord, and as a result, the money will not come through. Or for example, in the case of the electric vehicle, that the example that I showed you, the electric vehicle, suppose it pays 100 rupees, it will split it in one particular ratio. And suppose it goes to a next slab, say 1000 rupees, it will split it in another ratio and send money to different people. So likewise, you can make money smart. You can do a number of functions using smart money. Like for example, even you have a company. So for example, in a corporate office, you have Sodexo cards that you give out. Why do you give Sodexo cards? Because they spend it only for food. But what if you had digital money that made them spend it only for food? That is what you can do with digital currency, which you can't do with traditional finance money. So you can give currency from your office to your employees, and that money will be spent only for food. So you can totally eliminate the purpose of a Sodexo card. And it's easy to transact, and there are a whole host of features that you can use with programmability and programmable money and programmable payments. Next, I'll go on to the next question, which is question number 4. Intercurrency valuation is a global play. How is the crypto value determined? This is a very good question. I mean, definitely intercurrency valuation is a global play, and even to me, like when reading about this space, I always kind of talked about like whenever I thought about this, like it's always based on interest rates. Like you increase interest rate, your currency value gets changed, or the interest rate kind of controls the value of a currency. But this space is kind of different. There are different ways you can value it. For example, Bitcoin is based on you need to look at it as a form of a commodity. How do you value gold? How is gold valued? It does not have any sovereignty, but it still has a value, right? And it has a stable value for so long period of time. Bitcoin may not have reached that place, but in the future, as a crypto professional or a crypto working this crypto space, the Bitcoin will very soon reach that place of gold where it will be at a stable price. And because of the value it commands, because of its trustless nature, its decentralized nature. So to answer your question as to how crypto value is determined, it is determined by a number of different factors for different assets. So for example, for Bitcoin, they follow a similar valuation principle as a gold. We use something called a stock to flow model. Stock to flow model is recognized as a form of commodity pricing model. So for example, stock is the total amount of Bitcoins which are in existence in the world today, so which is 18.9 million, divided by the total number of Bitcoins which are produced in a year, which is about 300,000. So if you get this ratio, it will come to about 60. I mean, when I calculated last, and that's equivalent to what gold stands at currently. So basically, the BTC should be valued based on the stock to flow model. And I will get into the details in my later presentation very soon. I have answered this particular question for Bitcoin. For different other currencies, like securitized currencies like Ripple or anything, since it is offered by a private entity, that's why the security legislation is very important. Then we need to look at the common enterprise, look at how that particular enterprise is operating, what is the specific, like how does it gain transaction fees, how is it being remunerated, how is that enterprise being remunerated, and similar to how a company is being valued, we need to value that cryptocurrency. Proof of stake assets, like for example, Ethereum, they are valued in a different manner. I will share in my resource book, I have shared Rohas Nagpal's crypto playbook. In that, he has defined how to value proof of stake assets. It's a very different model that he has used. I'm not recommending that's a model, but that could be used as a model. And basically looks at the market capitalization, multiplies it by 3 and divides it by the total number of supply of the tokens, and then you get the value of Ethereum or any other proof of stake asset. So there are various valuation methods that exist, and there are a number of tools available online to kind of do the valuation. It may not be 100% accurate, But something that we really are looking up to is like for Bitcoin to reach a stable value because of the robust nature, because of the scarcity it commands, and because of the true value that it provides to the and true value proposition that it provides. We have one more question, which is whether cryptos were tradable in stock exchanges or at any time period or will work 24 hours. Interesting question. So currently, cryptocurrencies trade 24/7. At any in a crypto exchange, you can buy it at any point of time because it is not based on traditional finance. There is no centralized authority controlling it. It's completely decentralized. I mean, I need to be careful when using this term. It is kind of linked with different crypto exchanges, and people are able to use it 24/7. It is not tradable on a stock exchange. So for example, if you go to a bank account, you cannot buy a cryptocurrency. You can, what will happen in the future in Canada, for example, they have launched an exchange traded fund which is based on cryptocurrency. So what has happened is like there is a mutual fund and the underlying asset is cryptocurrency. So you can buy this mutual fund which will be issued as tokens to you, similar to how you buy, for example, Nippon Mutual Fund. The Nippon Mutual Fund will have a set of stocks under it, right? So, and then the Nippon Mutual Fund is what you will go to your Demat account and buy the Nippon Mutual Fund. Similar to that, mutual funds may be launched in the future, which is what we expect, where you will have a mutual fund and the underlying asset will be either Bitcoin, Ethereum, or any other underlying asset, any other underlying cryptocurrency, or it can be either only one Bitcoin, or it can be a basket. And then you can buy that exchange traded product or that mutual fund in your stock exchange. But traditional stock exchanges will not most likely have crypto exchange because the tooling, the underlying technology that they need to enable is very different. There are, for example, in US, there is Robinhood, which is a stock exchange firm. It was a fund. I mean, it is one of the pioneers in the stock exchange world in the US because they said that they are not going to charge any commission. And as a result, they were able to get a number of users for their exchange. So they recently launched crypto exchanges. So a traditional stock exchange firm, they said, they looked at the crypto exchange market and they said, okay, this looks interesting. Why don't we enter into the space? Currently, if you look at their balance sheet, crypto is making the most money for them. They entered into the space. They built, I mean, the reason they were able to enter into the space is they were technologically savvy. And and as you know, America has the right regulations in place to allow such firms to exist. So they entered into this space and they started offering crypto exchange services to all their consumers and retail users. So we can very soon see such phenomenon happening even in India. Maybe Zerodha will start offering. I don't know if they already do, but they are most likely a possible people who could start offering crypto services. The last question, which I can see as of now, Ms. Monica, please confirm that is the last question. The last question, I'll read it out, is as of now, the central bank guarantees the currency. Who guarantees crypto? I used to ask the same question to my friend in Canada. I mean, he was a crypto enthusiast. He used to say, oh, this is very valuable. And at that time, I was wired to think like intrinsic value and like what is the backing for it and the guarantee and like sovereignty and other aspects. But over a period of time, I realized that these currencies, they don't have any guarantee, and that is where the value lies. For example, I would strongly urge you, whoever has sent this question, to read a book called The Bitcoin Standard by Saifedean Ammous. This book has been forwarded by Nicholas Taleb, who was a world-leading author of Black Swan, and he has done enormous research to write that book, and I have read that book almost twice. For this presentation, I went through it again because I just want to kind of refresh my memory on certain concepts that he has spoke of. So basically, like if you look at it, cryptocurrency is basically split into two types. one is Bitcoin, and the remaining is alternate coins. So the reason it has two splits is because Bitcoin is a truly decentralized currency. It is existing only, I mean, there is no backing for it. There is no guarantee for it. It's trustless. That's where it deserves its value. And that's why it's growing in terms of its adoption, because you don't need a government to control. Like, for example, US printed so much amount of money during the COVID crisis. What will happen when supply increases? When supply increases, the value of the currency will drop. But that will not happen in the case of Bitcoin, because it is programmed to have only 21 million Bitcoins. And we know its inflation will drop every year. Every 4 years, the amount of reward of Bitcoin will drop. So that is why it is, sorry. That is why it is having so much value. For other currencies, like for example, Ethereum or Litecoin or Ripple or other currencies, there is a common enterprise. There may be a common enterprise who will be backing it. And that will be the person who will guarantee that currency. So even, for example, USD Tether is backed by an organization called Tether. They have to guarantee it. There is a lot of problems associated with a stable coin, and there are a lot of issues. I don't want to go into too much detail. But if you look at it, Bitcoin, there is no single person kind of controlling it. All other coins, there may be somebody, a common enterprise who will be guaranteeing it. If there is somebody guaranteeing is where I have a problem associated with it, because you have somebody controlling it, and if you have to place trust on somebody, then there is a whole host of risks associated with it. I hope that answers your question, but if it doesn't, please do reach out to me, and I'll be happy to talk to you on this subject. The next question is about buy and sell of crypto is 1-to-1. Is there a centralized transaction ledger? Good question. Yeah. So even though I say like the transaction ledger is or the transactions, Bitcoin is decentralized, there is a centralized ledger where it's not centralized, it is existing decentralized across many systems. So just to kind of explain to you, like, let me take one example so it's easier for me to explain to you. Suppose we take the Bitcoin blockchain network, right? So there are a number of nodes, or there are a number of miners that kind of support this network. Every miner has the list of transactions ever since Bitcoin was first created till date, all the list of transactions that happened in Bitcoin, and that is public. Like, you can go online and check the Bitcoin transactions which are taking place, and you can just see this list keep on updating. So that list you can see. I'll try to show you maybe I can try to show you yeah, so I'll just share my screen, and I will share a different screen. So if you can see here, this latest transactions, I've gone to Blockchain Explorer. This shows the transaction which is taking place, and it's kept on updating. So here you can see the list of transactions which take place for BTC. As you can see, it's a very vibrant market, and you can see the different transactions which are taking place for Bitcoin. It's just updating every second as we speak. 2.67 Bitcoin, 0.003 Bitcoin. So it's kept on updating, and from this transaction ledger, you can observe all the transactions that are taking place. So I will go on to the next question. I think we have time for one more question, Ms. Monica, and then I think we'll break for 5 minutes. Ms. Monica?
Yes, sir. Sir, there are a few more questions which can be compiled after the end of the session, sir.
Okay, fine.
Okay,
So
go
we'll
ahead.
break for 5 minutes, and Ms. Monica, please inform us once time is done.
Yes, sir. Yes, sir.
Okay, thank you.
Sir,
Yeah,
sir, can we start the session, sir?
yes, sure.
Yes, sir.
Okay. So I hope you had a chance. I'll start my screen share again. Okay. I hope you had a chance to grab a glass of water. You must be thinking why I keep drinking this water. Yesterday, as I was practicing my speech, my throat got really dry and I got a little sore throat. So apologies if you keep seeing me drinking this water. So now I go into the so what. I've spoken a lot about digital assets, and you must be all thinking, okay, what is in it for us as chartered accountants? And that's what I want to cover in this topic. I'd like to start with a quote. If a window of opportunity appears, don't pull down the shade, by Tom Peters. I think it aptly kind of states what I want to talk about. Like there's a whole host of opportunities in front of us now. And I think it's time for us to open our eyes and grab this opportunity. I really like this meme when it came out. When crypto was legalized in India, everyone was happy. But when there was a 30% tax on crypto, their face completely changed. Found this really to be funny. So I'm going to start with the services and career prospects. So as ever since, I passed CA, there are only two options for a chartered accountant. Either we go into practice or we go and take a job in the industry. So I broadly kind of classified my thought into two types, like either industry or a job or in practice. So as I mentioned, like it is a multi-trillion-dollar industry. There are multiple opportunities which exist, not only for a practicing chartered accountant, but also in terms of career prospects. For service, broadly, there are four categories I talk about. There is audit, consulting, financial advisory, and taxation. And for careers, there is a whole host of careers in financial modeling, tokenomics, fundraising, and advising. And crypto investigation and forensics, basically in risk, we need a lot of expertise in identifying risks for crypto firms, for banks, for the central banks. So there is a lot of requirement for people who have specialized in risk and crypto investigations and forensics. I'll start with audit. So auditing is going to become quite complex because it requires expertise. There are actually specialized firms in Canada. For example, RCGT, which is Raymond Chabot Grant Thornton in Canada, has a firm called Catalacty, which specializes in crypto auditing. They do SOC 2 compliance audit. They have partners who are PPAs who do specialized audit for crypto firms, and they give them SOC 2 compliance certification. So like that, there will be specialized firms which exist. And as I mentioned, that there are thousands of cryptocurrencies which exist with its own characteristics and special features. So understanding of that digital asset space is going to become more and more important. So we have internal audit, we have external audit, and primarily there are two types of companies which operate in this space where their business runs on crypto, and companies which invest in crypto. So first, I'd like to start with companies which operate in this space, where they are crypto firms like crypto exchanges, where they are crypto custodians, where they're providing any form of crypto service like NFT firms. How are we going to look at the external and internal audit, or what are the kind of skills we need to develop? We need to know how to, I'll start with external audit for crypto operating firms. We need to understand how we are going to value these crypto assets in the inventory. Also, we need accounting standards to support us. Currently, we don't have it. But at this point of time, we need to have some methodology to value these assets in our balance sheet. Tax applicability of crypto transactions is going to become very complex because there are a number of different ways you can transact in cryptocurrencies. You can do it offline. You can even hold a private key in a piece of paper. So there are a number of ways you can transact, and how do you kind of deal with the tax applicability? Because they have mentioned that even if you transfer from one person to another, tax is applicable as per the tax laws. So we need to look at how companies are going to look at taxation. So before I go on further, Ms. Monica, can we have that poll, or do we have time for the poll?
Yes, I will launch the poll.
You launched the poll?
I will launch it right now.
Okay. We just have one quick question for the members. It's just want to kind of take your feedback on this. Okay. Okay. So if you can just take 30 seconds to answer this question, just curious to see how your clients are doing in this space. Okay. So predominantly at this point of time, we can see that majority of your clients are not looking at crypto assets. We have slight around 14% which are who have clients who are investing in this space, and 14% who are looking at this space. I mean, pretty much I hypothesized it to be around this number because of the regulatory aspects behind it. There are limited regulatory aspects and there is limited awareness at this point of time. But looking at the retail space, I think at this point of time, we have a number of retail users. So I can get back to my speech by saying that companies are very soon going to enter into this space as they look at this as a volatile market, as the regulatory landscape starts becoming more positive in the right direction. We may see more companies kind of trying to invest in this space, and or maybe even look at launching companies in this space. So we may need to look at adequate disclosure in the financial statements so that the shareholders are aware of the risks and also about the types of cryptocurrencies a company is holding. Then the recognition of revenue, as I mentioned, we need a accounting standard for it, similar to how we have revenue recognition AS9. Now it's Ind AS. A little bit lost touch with the accounting standards. Then the internal audit, if we look at it, very important to look at the risks. There are a number of risks we need to look into, like crypto risks, technology risks, cybersecurity risks, business risks, and evaluate it, especially in the digital asset space. There are crypto balance sheets that are available online, where you can look at the ways companies have looked at risks to kind of understand how to evaluate risk, how to present this in a balance sheet. Also, there is we need to look at controls for risk mitigation. Okay, we talk about risks, but as when we give our internal audit report, we also need to give how we are going to mitigate this risk. And also look at the evaluation of technologies. So there are a number of technologies which are available to mitigate risks, to control the risks. And there are a number of standards also which are in existence. SOC 2, I'd like to specifically call out, is a major standard in crypto firms. Many firms want to get SOC 2 compliance license. The reason that they want to get SOC 2 compliance license is that their users will feel more comfortable if they trade or they bank on a firm which has SOC 2 compliance. And there are two types of SOC 2. There's SOC 2 type 1, SOC 2 type 2. SOC 2 type 1 deals with financial compliance, and SOC 2 type 2 leads with internal controls. So generally, like SOC 2 type 2 is most revered, and regulators also will try to ask for SOC 2 type 2 kind of compliance. Now, I'd like to focus on companies which are investing in crypto. So these are companies like Tesla who are investing in crypto. In Reliance, I know in India, some of the corporate treasuries are even bigger than the bank's treasury. So as they look into this space, I think they may very soon enter. And if they enter, we need to see how we are going to value these assets in the balance sheet, how we are going to recognize crypto trading or investment income, what is the tax applicability of trading or investments, how are we going to disclose this in the financial statements, and also prove or also kind of mention about the fairness or adequacy of controls. Then about internal audit, we need to talk about investment policy of digital assets. It's important for internal audit. It's going to be a little bit complex for digital assets because if companies are going to invest in this space, it's not the same as traditional finance. There is a whole host of issues we need to be thinking about. It's the asset is not held in a stock exchange or by a traditional custodian. It is held in this offline device. It is held by a crypto exchange. Who is going to maintain the control for it? How are we going to establish the controls for it? There is a lot of work which needs to be done. How are we going to set the governance for it? Who is going to be given the authority to buy and sell? How is the mandate? Because traditional banks are not going to provide these solutions. It's going to be fintech firms initially. Maybe later banks may enter, but initially it is fintech firms who are going to provide the services. Where are you going to store these crypto assets? And then also, how do we prevent the fraud, hacks, or cyber security related attacks? So there is a lot of work and effort which needs to be done in this space. And I think as chartered accountants, we are very well positioned to kind of support this economy. Next, I move into consulting and advisory. Consulting and advisory, there is a number of things we can do in the blockchain space, in cryptocurrencies, in token space. We need specialized advice and we need data-backed kind of advisory services that we need to provide. I'd like to talk about one such assignment that we did as a consulting firm for a digital asset firm. And we followed this approach where they wanted to start with a feasibility study and talk about the target operating model. And typically, my perception is that most of the work that you may get in this field is going to be in this regard. And I thought I could present just kind of a summary of what we did. So we started with a market analysis. So we tried to understand what is the market, who are the different players, like the landscape which I presented to you, and also looked at what is the market size, what is the growth potential of this particular market that the promoter wants to get into. Who are the major competitors in this space? Are there many competitors? How are they specialized? Is there a market gap? If there is a market gap, why are there not other players entering into the space? And if we are going to launch, how are we going to be better than our competitors? How does the regulatory landscape look like? Can we talk to the regulators? We had discussions, we had collaborative discussions with the regulators to educate them about this space and also to take them through what could be done to regulate the space. We talked about like kind of the controls that we could build and establish controls so that the investors are protected. I mean, the regulators are bothered about the investors ultimately, whether they are protected, they have the right controls in place. And finally, the corporate structure, like how do we structure the entity, and tokens. I mean, that's a whole host of topics. I mean, you can go into great detail about how you want to design the token, how the token market looks like. Totally kind of vast topic to discuss. Then I move on to, okay, under each there is a blue box. I mentioned what you need to know to enter into that or provide that particular service. Basically, for all these kind of things, you need to have a good understanding about the digital asset space. For example, what I do is I track the news daily. I read reports. I read books. I talk to or I interview some of the leaders in the space. I host such talk shows. I try to talk whenever I can. And I also write thought leaderships. As a consulting firm, we write thought leaderships. So we keep ourselves updated, and that's why we have data. We also have a market intelligence engine in our consulting firm, which gives us data on the market. And we have sources, different types of sources, which helps us give data-driven advice. And at this point of time, I think it's very important for us to give advice which is backed by solid data. So these are some of the steps that we are taking to provide services to our clients. So if I talk about business models, I'm very sure you would have also developed similar models as chartered accountants, like looking at a business model, looking at the tokenomics. For example, tokenomics is a big topic. So when you want to launch a new coin, how do you think the economics of it will be? How will the business model be? And also designing the business model for the client, like how does he want it to look? Does he want to price it at a high price or price it at a low price? If he wants to price it at a high price, then what is the value that he's going to offer? If he wants to price it at a low price, then how does he be the lowest in the market and have the lowest cost and still have value to the consumer? So those are kind of the things we look into the business model. In risk assessment, as I mentioned, a lot of things to discuss in risk assessment. Geopolitical risk is something we also need to talk about. Like geopolitics is important because geopolitical events affect the crypto prices, and we need to track geopolitical activities which are taking place. Currently, Ukraine issue. I don't know how it's unfortunate it's happening, but it's definitely affected the crypto market prices. So those are other risks, and we need to think about mitigating strategies as well as to how a business can mitigate such risk. Is there ways that they can increase the stickiness factor? So there are mitigation strategies that we need to think of when we even do our risk assessment. And finally, a target operating model. Target operating model is a whole gamut of, it's like giving them a toolkit to launch a company into existence. It's the operating framework, it's the go-to-market strategy, like how do they launch their product into the market, how do they structure their corporate entity, how do they get funding, and a detailed financial modeling and analysis also will be done as part of the target operating model. This gives you a snapshot of what you can do in terms of servicing as consulting and advisory. In terms of financial advisory, there are a whole host of things that you can provide. I've listed out a couple of things here, but as finance professionals, we are capable of putting a number or value to anything. And I think we are very well equipped or taught in our CA days to understand how to value different entities and account for different things. So some of the financial models that we need to build may involve crypto projects that may come up, or the DeFi solution space. That's a big ocean, that's a big universe which needs to be talked about separately. But it's a decentralized finance space. Basically, there is no centralized authority which is monitoring it. Like, so for example, you have a crypto exchange like Coinbase. It's a centralized institution which exists in America, which offers crypto exchange. But there can be a decentralized crypto exchange which doesn't have a centralized work, doesn't have even a corporate setup, and it can exist by having multiple owners, and they can provide crypto exchange services. So the financial model for that needs to be completely different, and we need to understand the space to kind of provide to provide a financial model for this place. So detailed understanding about the different tokens, how the macroeconomic and microeconomic factors play a role, interest rates, inflation, consumer sentiment. These are different things that we need to have an idea about. Then we go on to taxation. Must be a pet subject of many of you chartered accountants. Broadly, we have direct and indirect taxation. So we have recently received some guidelines as to how we need to tax for direct taxation. So even for that, we need to understand how these crypto assets works. If tomorrow our client comes to us with a list of transactions they have done, we need to understand what are the different types of transactions, different types of crypto assets, at least broadly, and have an understanding of various types of transactions they have done. What is like, for example, he lends his assets and gains cryptocurrency in return. How do we account for that in terms of tax? Do we tax it? Is that defined? I don't know. I'm yet to kind of read it in detail, but suppose you get interest on the crypto asset, you give a fixed deposit of your crypto asset and you get paid in crypto asset. How is it going to be taxed? We need to think about it. And utilizing tools, we need to utilize tools to track the assets and the transactions. Indirect taxation, currently there is no such regulation there. I mean, the only thing I remember about indirect taxation is this big book which I used to read during my CA days. I have a little bit lost touch about the indirect taxation part, but I am sure that there will be a whole host of issues which will come up in terms of thinking or effort which needs to be thought about when we look at indirect taxation. So I'll just take you through some of the tools we use as a consulting firm to provide services. Starting with the stock to flow model, I answered somebody's question on that. I'll go into detail about this later. Basically, it is somebody has developed this tool, and in my resource booklet, which I'm going to send to you at the end of the session, I've given you details about this stock to flow model. Basically, this person has valued Bitcoin, and he has valued it ever since it has been created. And he tracks the, in this screenshot, which you can see here, the first screenshot, it shows how his model tracks against the actual price of Bitcoin. And if you can see that curved line with against the straight lines, it more or less matches with his model. And that's why it's kind of most revered in terms of a model for Bitcoin. So that is some modeling tools you can use. Then obviously there is Glassnodes. Glassnodes provides on-chain metrics intelligence platform where you can look at transactions, you can look at user data, you can look at miner data and other detailed metrics and analysis. And hash rate index, my colleague Kashyap, he uses this a lot currently. So he looks at different prices in hash rate, and he kind of tries to value the crypto asset. So once you get into the details of it, you might appreciate these tools. But anyway, I'll give you details of this tool in the booklet at the end of the session. So as you can see, this is the stock to flow model. Again, this is not investment advice. Please consult your investment professional to before investing. Whatever you can see as to the price of Bitcoin is based on this model. and it's up to your. I would urge you to do complete research before you invest in any asset. So this model basically, as I said, it says stock divided by flow, and it measures the price of Bitcoin. And the details of this will be shared in the booklet. Just presented to you here. These are some of the other tools and resources that we use. We take Block Research is another top research for crypto. I have shared that in the booklet. ARK Investment has released an investment report on how they look at the space, how they value crypto, how they value Bitcoin in the next 10 years. Then CFA Institute. Then there are some good books like Layered Money by Nick Bhatia, The Bitcoin Standard by Saifuddin Amos, The Blockchain Revolution by Don Tapscott, and some other resources like CoinDesk, BIS, Bank of International Settlements, and Bank of England, CoinGecko, Cointelegraph, the Bank of Canada. These are some of the other resources that we can use. So to summarize, I've talked about audit, advisory, taxation, and tools. So audit is going to rise. We need to be specialized. We need specialized knowledge about the space. We need deep understanding of the digital asset market to provide customized strategic and financial advice. Taxation has been introduced, so we need to understand the space and also help define the regulations as chartered accountants. And leveraging tools from the internet and published books and recipes helps us provide credible advice. I'd like to end this with a quote. It's not the strongest or the most intelligent who will survive, but those who can best manage change. And as we can see that we are witnessing change in this ecosystem, I think it's time that we take the right steps to make to kind of progress or adopt these new assets or this new ecosystem and help define this new ecosystem. So I'll open it up for questions. But before I go to the questions, I have some more slides on how I manage my assets. I can get into the details in the question and answer section. But before that, I'd like also kind of end with my thank you note. I'd like to thank the fellow chartered accountants, honorable guests, the chairman CA Chinna Mastan Salakia for providing me this opportunity, and CA Naresh Chandra Geli, secretary of the Southern India Regional Council, and the Institute of Chartered Accountants for giving me this opportunity. CA MB Sridharan for introducing me to the SIRC members. CA Rekha Umashiv for giving the kind introduction and also providing me this opportunity to speak. CA PS Balasubramaniam, who is my father, who provided me unwavering confidence and promoted me and has been supporting me so far and being my role model. My mentor, Laurent Ferrell Pearson, who is in Canada, who is founding partner of Block Zero. He is a specialist in the digital asset space. Marie Chantal Leduc, who is also my mentor. She is also a specialist when it comes to strategy advisory. She has given me a lot of tips in preparing for this presentation. Kashyap Anand, who is also there, who has helped me coordinate this session. Thank you so much. He's in Canada. He woke up early morning, 7:30 a.m. for this session, and worked tirelessly to help develop this presentation for me. Sabrina McNeil, who also worked tirelessly to develop this slide. If the slides look really good, kudos to her for the great job she has done. Miss Monica, who has helped me coordinate this session, she has also kind of worked off hours, after office hours to do demo sessions to make sure that everything is working. I had a number of questions, and I generally have a lot of questions, and I think I troubled her with a lot of questions, but she was patient and she answered every question, made sure that the session works. And Mr. Sevalor Kumar also for coordinating this session. Thank you all very much. Please see my contact details. And please, Monica, if you can please hand out the document in the whichever section. And I open the floor to questions. So
I've posted it in
the question section.
Yes, sir.
Okay. So I'll Okay. Like shares or mutual funds, how crypto can be identified? And if we purchase, can we purchase from any person who's holding it or only through proper exchange? So, like crypto exists in the like it exists on a network, and either like the genesis of it is by miners. So the miner is the first person who mines the cryptocurrency and introduces it into the network. And then after that, it is similar to a secondary market. So suppose if I have to draw an analogy to a company, the shares which are introduced by the company's promoters is the primary market. That is what the miners are doing. And the secondary market is where it is in the stock exchange. That is what the owners of the crypto assets trade, and that is where we are seeing it in the secondary market as the crypto exchange. So if you want to purchase it, you can purchase it from any person who is holding it at any value. So for example, if you want to purchase it from me, from this hardware wallet, I can send it to you directly as a transaction, and you can buy it for any price. It will. The only thing is that it won't be recorded on the stock exchange ledger. Like I mean, the value of it will not appear in the. It will say that it has gone from one particular wallet to another particular wallet. There will be no value, like there will be the value associated with the price of the Bitcoin recorded in the ledger, but he will not know what consideration I have paid for it. So for example, for one Bitcoin, now it is currently at I think around $40,000. You can pay maybe $35,000 because, or you may pay $45,000 because you want to do it off the books. I'm not saying that this encourages black market, but this can be done without it being recorded on the crypto exchange from person to person. I hope that answers your question. There is another question. What happens when there is no power? Cash is the king. Very, very, very good question. I really like this question because that is what central bank digital currencies are trying to do. If there is no power, a central bank digital currency should also work ideally, because cash. Sorry, Miss Monica, you're on.
Sorry. I mute myself.
Yeah. So when there is no power, cash is king. So yeah, central bank digital currencies, they need to work even without power. So for example, there are offline cards which are being developed. I can talk about like specific cards which work offline. So basically what will happen is that this will be an offline card which will exist, which will be digital. So you need to put a battery on it, obviously, and that will allow you to transact digitally. Or also you can have prepaid cards which will allow you to tap and do a transaction. But as you said, cash is definitely king, because it is a true token instrument. It is a true form of currency which can exist, which is completely, you don't require power, you don't need the network, you don't need internet to use it. So in that sense, cash will never go out of existence, at least according to me, or at least according to the thoughts that we have. It will always remain in existence. What will go, what might reduce is the amount of cash which is in circulation, because you can hold the same features of cash in a central bank digital currency, but the true potential of cash, I don't know whether a central bank digital currency will reach. It may reach, but there are technologies which are available to make it work without power. The next question is, how can we know about absoluteness or genuinity? So it's a very difficult question, and I would urge you to do as much research as possible to know about the absoluteness or genuinity of a transaction. You need to do due diligence on the person you are buying it from. There are a number of scams which take place in this space, and it is very, very dangerous to do I have lost a cryptocurrency because I didn't know how to send it from one wallet to another. So I would highly urge you to do thorough research. There are a number of websites available online. You can talk to me if you want to understand how to invest in this space, or like not. I mean, I may not give you investment advice, but I'll at least tell you like the ways to kind of enter into the space maybe shortly. some of the tips I can give you is like they do dollar cost averaging. So suppose you want to invest in this space, the best way to enter it is to dollar cost averaging. You should not invest in one slot. That way you enter at one point and then your risk is exposed in that particular point of time. You can kind of average it over a period of time. I mean, I'm sure you as experts may already know this, but even similarly in crypto, dollar cost averaging is something we highly suggest to invest. And for genuinity, you have to do a thorough due diligence. And as chartered accountants, I think we always look at risks, and we are wired to think about risks. And I think that's a very good thing. So I would urge you to do thorough due diligence before you start looking at the absoluteness or genuinity of the currency. The limit of 21 million Bitcoins, a very good question. I don't know why that number even came up, but it was a programmability feature. So the Satoshi Nakamoto, he invented he basically created this currency, and he wanted to limit it. And what he did is that from 2009 till 2140, that is 2140, till that year, there will be Bitcoins which will be mined, and every 4 years, the rewards will reduce by half. So currently we are at 3.125. So for example, for every new block of transactions or block which gets added into the blockchain network, the miners are rewarded 3.125 Bitcoins. And every new block gets created every 10 minutes. And by that program, that is why he limited it to 21 million. And the main reason for him to limit it was scarcity. Wanted to control inflation and reduce the amount of new Bitcoins which were created. Okay. The next question is, like shares or mutual funds, how can crypto be identified? And if we purchase, can we purchase from any person who is holding it or only through proper exchange? How can it? I think you already answered this question. Sir, why is it Bitcoin mining uses electricity? What is the connection? Very good question. So the thing about Bitcoin mining is that I'm just thinking of how to explain this simply in a simple manner to you. Basically, what it does is it is a piece of computer which mines Bitcoin. And for running your computer, you need electricity, right? Because it's doing some processing work. So for example, you're typing something in Excel, it is doing some processing work. Similarly, for mining Bitcoin, it is running a number of checks. That miner, it is like a piece of, so the chip board which exists in your laptop, it has a chip, it has a processor, microprocessor, or whatever, like the motherboard. And that ASIC miner which exists for Bitcoin miners is similar like that. And it has a fan, and it is like that. And there are a number of things which are set up in a large data center. And what ends up happening is that it consumes a lot of electricity. And because it is very difficult to mine Bitcoin, the amount of electricity that is consumed is very large. So for a business model, for a Bitcoin mining farm to be successful, it has to be positioned in a place where it has the lowest electricity price, because that is the major operating cost for a Bitcoin mining farm. Electricity is the major operating cost for a Bitcoin mining farm, and if you have a location which is the lowest cost for that, typically they are hydroelectricity or renewable energy sources which offer the lowest electricity sources for Bitcoin mining farms. They will be able to provide you the lowest electricity price, and that is the whole connection. I hope that answered your question. But I mean, there is a whole host of things that I would need to discuss to get into further details about this question. Okay, I think this is the last question that is there. Is all digital assets can only be done through blockchain technology? If yes, why? Very interesting question. The answer is no. I mean, the digital assets need not be only on blockchain technology. And this is not only for cryptocurrencies, this is also for central bank digital currencies. I'll start with digital currencies first. Digital currencies, by that I mean they are not governed by any centralized authority, or they're by a private entity, or by like a Bitcoin, for example, decentralized. They need not be on blockchain technology. They can be on any other form of technology. Blockchain technology only is a form of is an easy way to record transactions. And if you look at real currency per se, it is cryptography. That is the value of a cryptographic token. And that need not be on blockchain technology. It can be on any other form of technology. For example, even some of the cryptocurrency, the central bank digital currency firms that exist, they offer central bank digital currency, which is not based on blockchain technology, because like as banks and central banks are averse to digital currencies, virtual currencies, they are moved away from offering it on a blockchain based system. So I hope that answers your question. And I think that is the end of the questions. Sorry, I went a little bit over time, 5 minutes ahead. Apologies for that. But I hope you had enough information, and I hope you collected the handout. So now I'll hand it back to Ms. Rekha Uma for the final word. Thank you.
Thank you so much, sir. Am I audible, sir?
Yes, you're audible, Ms. Rekha.
Fine, sir. Thank you so much. So I think about the audience also, I'm sure there would be a great value addition from the session. So in the beginning, we had a poll regarding how many are actually investing in this cryptocurrencies. It was more than 50%. So as a person, I only have the theoretical knowledge about cryptocurrencies. So for me, I really benefited from the session, at least to understand the basics. It's all about what is central bank cryptocurrency, about the consulting, all the aspect was like well placed, and it was well conveyed, I should say. And thanks a lot, sir, for this wonderful session. And we also expect more sessions from you. And I'm sure the same will be the response of almost all the audience and members who have attended this. So
Ms. Rekha, if you permit me, can we conduct that poll again to see how it has changed now?
Yeah, sure. Monica, can you just...
Monica, can you conduct that poll again?
Again, you need to, I think I have closed it, sir, actually. Selvakumar, can we again connect the poll, actually, sir?
We need
to be interesting to see what is the
question. 1 minute, maybe we'll try.
That one question on like, are you investing? Are you going to invest in cryptocurrency? If you can please put that poll question, it will be interesting to see the results.
So maybe getting an overall idea about this, now we can see what the poll opinion is all about.
I'm curious. I don't want any claim against me. But anyway, I hope you were able to gain some idea about this space.
Sure.
Ms. Monica, is it possible?
Yes, once again, I'm like just typing it. So I'm going to invest in?
Yeah, are you going to invest in the cryptocurrency space? Yes, no, maybe.
I guess, Monica, it was the second question in the beginning of the session, after the age group.
Once. I have just launched it.
Yeah. So members, please, if you can give your...
yes, sir. The voting is like going on.
Yeah.
I will share that.
Okay, so we have converted couple of maybes from the no, I guess. Do you remember what was the first answer, Ms. Monica?
Yes, sir. I will share that also. I will share that also.
Yeah. So we are 48%, 14%, and 38%. And okay. Oh,
Yeah,
we have
I
actually
think that-
dropped.
So we
Okay.
can also take into account some of the persons who have left. Okay, since it is the
Okay,
end.
okay, okay.
So they
Yeah,
may
yeah,
not
yeah.
have participated in the poll also.
Okay, okay, okay. Fine, fine. Anyway, it was interesting to see. I hope that provided some more clarity. Now I hand it back to Ms. Rekha. Thank you so much for this opportunity.
Thank you so much, sir. It was indeed very useful, very lucid. I mean, the session, the entire content was placed very lucidly. So at least for persons like me, who is like very beginner with this new topic, it was very, very useful. And we also expect more sessions from you. Interesting
you.
sessions with respect to digital, virtual digital currencies. Anyway, thank you so
Definitely.
much, sir. Thank you for making the session.
Thank you. Thank you. Thank you. Bye.